Welcome back, everyone. Today is February 5th, 2026, and the markets are currently navigating a storm of tech volatility, geopolitical shifts, and major central bank anticipation. We've seen a massive 24 hours where artificial intelligence didn't just make headlines. It wiped billions off market caps. From the halls of the US Congress to the trading floors of Mumbai, here is your detailed macro breakdown. As a bonus, I have created an in-depth guide to the 7 costly tax traps for high net worth NRIs, a strategic report on avoidance and compliance. You can download it simply by clicking on the link in the description. Let's get started now. Section 1. The US market, tech turmoil, and the Bessent effect. The US market is currently a tale of two cities. While the blue-chip Dow managed a modest gain, the tech-heavy Nasdaq is reeling. The primary culprit? Anthropic's new AI automation tool. This tool, designed to automate complex legal and corporate tasks, has sparked a defensibility crisis. Investors are questioning which software and service-based business models can actually survive this next wave of AI. Key stock moves. AMD plummeted 17.3% despite beating earnings, proving that in 2026, good isn't enough. The market demands untouchable growth. Nvidia slipped 2.8% as the chip sector cooled. Walmart provided a rare bright spot, with its market value crossing the $1 trillion mark for the first time. The most significant political development came from U.S. Treasury Secretary Scott Bessent. He clarified that he does not have the authority to mandate banks to hold digital assets, cooling crypto reserve speculation. Furthermore, the One Big Beautiful Bill Act is nearing its peak impact, expected to inject nearly $160 billion in consumer deductions, keeping inflation sticky around 3%. Section 2. The Indian market, post-budget jitters, and the RBI stance. India is dealing with the double whammy of domestic tax changes and global tech contagion. The IT sector bloodbath. Following the Anthropic AI announcement, the Nifty IT index crashed nearly 6%. Major heavyweights like Infosys and Wipro are facing intense selling pressure. The market is still digesting the Union Budget 2026. The hike in securities transaction tax has significantly increased the cost of carry, leading to a drop in derivative volumes. All eyes are on RBI Governor Sanjay Malhotra for tomorrow's policy announcement. Despite hints at easing, status quo is expected. Why? The recent US-India trade deal has bolstered growth so much that the RBI no longer feels the urgency to cut rates. Commodity pressure. Gold and silver in India have seen a massive correction, largely due to a strengthening US dollar and easing Middle East tensions. Section 3. Global markets and crypto. Nikkei is down 0.9%, while Kospi is heavily hit by the chip sell-off in Samsung and SK Hynix. In Japan, Sanaenomics is forcing corporations to unlock cash. In Europe, Germany is pushing a €500 billion infrastructure fund to bridge the growth gap. The crypto market is experiencing extreme, bipolar price action. Bitcoin is down nearly 8%, and Michael Burry has issued a fresh death spiral warning. On a positive note, Satoshi Era wallets from 2010 are waking up, confirming massive liquidity in this 2026 bull cycle. The Genius Act is providing a framework for stablecoins, but the upcoming Clarity Act is the next big hurdle for US investors. So what's the bottom line? We are in a micro-shift era. The broad macro shocks are fading, but micro details are now the primary drivers of volatility. If you're holding tech, brace for a bumpy ride. If you're in utilities or infrastructure, the Vixit Bharat theme is providing a solid cushion. Thanks for watching.